Hello friends, welcome back to my channel. Don't follow Warren Buffett's oil bet. I will appreciate the viewers to subscribe to my YouTube channel if you like my content. It's now time for us to ask the question, have we reached a reversal point for oil price? Obviously, Goldman Sachs doesn't think so, but we should remain vigilant that the thinking behind yield has changed. This is extracted from one of the meetings where the speaker mentioned that we have reached a point when we realize that we followed the strategy for 4 months, we have some achievement. But if we continue like this, according to reasonable thinking, we will end up in a very bad way for Europe. So we have to think about something. Negotiations, ceasefire, peace, diplomacy, that's our solution, Oban said in relation to the sanctions on Russia. Just look at the inflation data for Europe. The CPI data has been going up. Maybe it's plateauing here, but it's going out generally speaking. Well, the saving grace is that Euro's area's CPI data is not as high as that compared to US inflation data. But we know our European Central Bank will not be having a smooth path in hiking its interest rate when we see bond yields of weaker EU economy spiking. Here, the yields on Italian, Greek and Spanish government bond yields continue to rise, and with Italian 10-year bond yields spiking up to as high as 4% recently, ECB is really having a very tough time right now. ECB now says that it will develop a new crisis tool to help indebted in countries. With ECB hands tied for inflation control, the baton is now thrown back to politicians of EU to bring inflation down. Food prices, energy prices have to come down. For them to reverse course just a number of days later, ECB did mention that it would direct cash to more indebted nations from debt maturing in a recently ended 1.7 trillion pandemic support scheme. This is something that we have to take note. Is it quantitative tightening for the European side, or what can they do if they don't want inflation to go up? We know that France President Macron wants his presidential re-election in April 2022, but now in June 2022, he has lost his parliamentary majority. Just look at the Brent crude oil price that has gone up so much by almost 50 USD since March 2021. We have seen that Euro areas has clearly explained that a significant portion of the increase in inflation data is due to energy costs. You see the orange color? That's the energy costs that contribute to the high inflation data in Euro area. What's more, Biden's approval rating is near record low as inflation affects many Americans' families. With the midterm elections due on 8 November 2022, the projections right now is that US Democrats are due for a major upset. I mentioned before on my Twitter that it's not that advisable to go for long oil positions when WTI oil price was around $116 US. I would think that amidst all the quantitative tightening, the speculative bets on oil futures will also fall. Biden really needs to get oil price back to around $60 US and maybe even lower to increase Democrats' chances for midterm elections. Sadly, time is running out. Can get things done in time to avoid the predicament that Macron is facing now? We're seeing that Exxon Mobil share price has gone up by so much since March 2020. It is time now to think whether Exxon Mobil share price has peaked. Just taking a 1 month share price chart, we've seen that Exxon Mobil share price has come down by around 10% since 1 month ago. It is noteworthy to realize that United States is already self-sufficient for its own natural gas users. See the price chart of natural gas, which fell from 9.322 USD all the way down to 6.239 USD. This is over 30% fall in natural gas. Chevron share price is also down 18% on a 1 month period. Marathon's oil share price is also down 25% on a 1 month period. BP share price is also down by 11% over a 1 month period. In summary, with high global inflation pressures, various superpowers like US, Europe, China, Russia, India have to act promptly in view of the political pressures that they face. It is wise to start thinking now. If oil price has already peaked in June 2022, if so, it would be wise to take profit in oil company stocks like Exxon, BP, Chevron, Marathon Oil. Also, we have to start thinking whether to start to avoid having long positions in oil futures. Reason being because tier 1 investment banks will not always be right. As always, this should not be construed as any investment or trading advice. Thank you.